Good afternoon, ladies and gentlemen, new and struggling traders. It's a pleasure having you here today. First of all, I want to apologize for yesterday's absence. We had a quick travel that we had to make, and we couldn't hold a session yesterday. Happy New Month, Happy New Month, Happy New Month, everybody. It's August, and we are all happy to be alive. Even if the trading business is not going according to plan yet, we are still happy to be alive. And with time, with perseverance, with a lot of practice, you will get better, right? So from where we stopped on Tuesday, we are going to proceed with the fundamentals. And you can see fundamentals as we, finished up. We said it's under market analysis, where we have fundamentals and technicals. And these two help us to create and implement a trading strategy. So this fundamental, we are going to be looking at it based on Forex Factory, right? So Forex Factory is how to interpret the news. So we're going to dive into that now. So please, guys, note our live sessions will be deleted after a while. So it's always advisable for you to watch them as fast as possible. I repeat, our live sessions will be deleted. So it's always advisable for you to watch them as soon as possible, right? So let's dive into the Forex Factory. Let's look at what we have over there, how to interpret the news as fast as possible. And I always tell traders that we can explain this business within a very short period of time. And that's just what we're going to be doing for you. We are going to be explaining this Forex Factory in a very, very fast manner so that we understand not just what it is, but how to interpret it. So if you look right in front of us, you notice that we have news from Sunday, Monday, empty, Tuesday, Wednesday, and then Thursday today. And you can see we have for Friday as well. So this is the calendar for the week. And if you notice, everything here is red. Everything here is red because we actually did a filter and turned on only the red ones. I'm going to show you everything. I'm going to click here on the home page, and it's going to show us the news for today only. So we're going to use this one because this one has yellow, gray, red, and orange inside. So we're going to use this to interpret everything. So look quickly. I'm going to do this in 1 minute, and then we're going to continue. I don't want to take much of your time. When do you want to make money? I believe you want to make the money now, this today, August 1st, and it's not too late. So Thursday, August 1st, that's today. You can see the time of today when all this news came out and when the remaining will come out. And you can see the currency that has been affected over here and impact. Impact over here simply means if I put the mouse on this yellow, it says low impact. Here, non-economic, red or orange rather, medium, and then red, it says high. So simple, low impact. When this news comes out, the final manufacturing PMI comes out by this time, 1:30 a.m., the reaction, the impact will be low. That's simply what it means. So that means that we will not get as much volatility in the market. So based on this low, medium, high, which ones do you think the volatility would be the one to pay attention to? Obviously, it's going to be the red, the high. And you notice that's why we turned on only the red earlier. So now, as we said, quickly to interpret this news, looking at the actual, the forecast, and the previous, we use the actual to know whether it's going to be buy or sell these currencies over here. So here, quickly, guys, as I said, in 10 seconds, we can explain how to interpret this news. Here, the outcome is black. So black is neutral, meaning that we're not buying, we're not selling. The actual is here is green. That means that we are buying for green. The actual here is green, so we're buying. The actual here is red, so we're selling. So green, buy, black, neutral, red, sell, green, buy, black, neutral, green, buy, black neutral, red sell. You can see what we have just done here. Fastest way to interpret this. So once you know that you are going to be buying JPY, like, oh, okay, no, this one here. That's once you know you're going to be buying AUD here based on this actual outcome that came out at 2:30 a.m. You're going to be buying AUD, right? But you have to buy AUD against another currency. You have to buy AUD against another currency, making it what? Making it a currency pair. So for you to trade a currency pair, right, you have to combine this AUD against another. So I'm going to quickly show you how to pair two currencies together. I'm going to show you how to pair two currencies together. So let's clean this up, and then we're going to take you to how we can pair two currencies together, which is very, very important. So, guys, we have just shown you, based on the actual outcome, how to interpret the news as fast as possible. Based on what? Based on the color of the actual. Black is neutral, red means sell, and then green means a buy. So click on share. Here we have how to pair two currencies together. And you can see we called it currency pair X and Y, where X is the first currency. The first currency is known as the base currency, and Y is the second currency known as the counter or the code currency. X could be euros. So if the first currency is euros, can Y be euro? No. You have to buy one currency against another currency. So Y could be USD. If X is AUD, Y could be JPY, and so on. Right? So this is the concept over here. Remember we said we like to explain it as fast as possible. So you have the currency pair XY here, and you could click on either buy or sell. Remember we said the business is all buying and selling. So you could either click or buy on sell. So if you click on buy, which of these two are you buying? If you click on sell, which of these two are you selling? So the concept now is this. Whether you click on buy or click on sell, you are always attacking the first currency. I repeat, the first currency. So if you click on buy, you're buying the first currency. If you click on sell, you're selling the first currency. So what will you be doing to the second currency here? You'll be doing the opposite. I repeat, you'll be doing the opposite. So this is how it looks like over here. So because we're clicking on buy, remember we said we buy the first one here, we buy X, and then we do the opposite here, which is sell Y. And over here, click on sell. What are you selling? The first one, X. You do the opposite here, buy Y. So I hope you understand this. Guys, trading with the information that is being shared, it's very easy and very fast for you to grab it and then run with it. I repeat, it's very easy for you to grab it and then run with it. So you run with it, it's now a thing of you've gotten all of this covered. It's now for you to practice. I repeat, it's now for you to practice. So when it comes to the practical aspect, we always like to look at an example where we quickly breeze through. So this is an example here. Let's assume it's an assumption, maybe for one reason or the other. We got the information telling us to sell car. It could be from the interpretation, from Forex Factory, or it could be that something is happening in Canada, whether it's wildfire or it's election issues or whatever, right? And then you need to sell the Canadian dollars. That's the information we have. Now we have this currency pair over here, USD CAD, and we have CAD JPY. Don't forget, it's what we click on here that we attack the first currency. So whether it's a buy or sell, we attack the first currency. Buy or sell, we attack the first currency. But then don't forget, the information we have is a sell card. So here, we're going to do this. We look for this sell card, which is the second position. We put a sell there. We look for the card, put a sell in front of it. Why? Because this is what we have over here, sell card. And of course, the other one is going to be a buy. So this is a buy here, and this is a buy here. So because whatever we click here, we attack the first currency, that means that it must be a buy here. So you click on buy. What are you buying? You're buying USD. What are you doing to the opposite currency? You're selling. And this is it here, selling card. So buy here is correct. And here you click on sell. So what are we selling? We're selling what? The first currency card, which is what we got here. Now we're doing the opposite to this, buy JPY. So this is also correct. So you can see that within a very short period of time, we have been able to interpret this news. We have been able to understand what it means when we click buy or click sell. We are attacking what? The first currency and then doing the opposite to the second currency. I hope that is clear enough. If you are here watching live with me, you can let me know that that is well understood. And if you are here watching it on the replay, you could always comment later before the video is pulled down that yes, well understood. Okay, great. So this is another example, as we can see here, and I believe you can easily do it. Now we are zooming again for one reason or the other. We are buying pounds, right? Maybe in the UK, they're hosting the World Cup or whatever, and that period is going to make the pound so appreciate to be in high demand. So what would you do? You will do what? You'll be looking forward to buying pounds. So you have this currency pair, Euro GBP and GBP USD. And don't forget, it is buying pounds, so we have to put buy in front of the pounds here. And of course, put sell for the opposite, right? So because this first one is a sell euro buy GBP, that means that we're clicking on sell. Don't forget, when you click on sell, you attack the first currency. So it is sell euros, and then you're doing the opposite to this buy GBP. So this is correct. And of course, by the time you do this buy GBP, you can see that's what we have here correct as well. You can see within a short period of time, we have been able to interpret this quickly, right? So straightforward, straight to the point, without wasting much of our time. So you have questions, feel free to ask. On here, we have technical analysis. Now we have just talked about the fundamentals. We are going to be looking at the technical analysis. I repeat, we have just talked about the fundamentals. We're going to be looking at the technical analysis. Technical analysis is very, very key, very, very important for us to take note of because it is what we see on our charts. It is how we place trades using information. And we're going to be talking about this based on price action, support, and resistance. Now we're going straight to the point. We want to finish on time. And we always say we can just give you what you need to know and not just a whole lot of information, but the key information for you to work with. Price action is simply the action of price that gives us the behavior of price, the direction of price, the trend of price. So when we say price action, price could either go up or price could go down. That's the action, right? And then this price action, it gives rise to support and resistance that helps us with our entry and exit. So price going up, price going down, you're going to see now how this is going to help us based on the behavior, the direction, and the trend, right? So if you look at this, if I ask you what is the price action on this chart, clearly you will say it's an uptrend. Why? Because the price is going up. What is the direction? What is the trend? What is the behavior? Price is going up because from the very beginning, you can see how it went up first of all, then down, then up, then down, then up, then down, and then blasted up and then has been high. From the beginning here to the end here, you can easily say price has been going higher and higher. And this is something that we need to be aware of. And because of this price, we have it in three different views. You can look at this movement here, this movement, because price action is also in the movement, behavior, trend, direction. So this movement here, you can look at it based on line chart, bar chart, and candlestick chart. It's up to you. Most traders use candle because it gives them more information and it is clearer on the eyes. And looking at how a candle is formed, in order to know whether the candle, because it is either buying or selling, in order to know whether the candle is for the buyers or for the sellers, what do? It is the relationship between the open and the close. Let's assume the price, don't forget price opens at 10 and then closes at 15. What does this mean? Price has gone higher. Who is taking the price higher? It's the buyers. So here is the buyer's candle. Here, price opened over here. Let's say price opened at 20 and then close at, let's say close at 5. So who won over here is the sellers. Remember, the buyers and sellers are doing battle. The buyers want the price to go up and the sellers want the price to go down. So buyers can do, sellers can do, right? The most important thing for you guys to do is to implement the information. We give you the information as simple as it is, and then it is for you to implement it as fast as possible. So here are candles. Remember we said candles is what is, easy on the eyes for traders. And then these are candles that have some powerful information for you to enter. Because price action is going to help you with the entry and exit, even using the support and resistance. So we're going to explain support and resistance in a bit. So look at this. These are the candles and what we're expecting to happen after. For the bearish pin, you can see how it looks like when it comes out. Bearish means selling. It's for you to click on sell. When you say bullish pin is up for you to buy. So bullish engulfing up, bearish engulfing down, right? Now, when it comes to support and resistance, it is for us to understand support and resistance came about based on price action. Without the action of price, we would not have support and resistance. So this support and resistance is to help us to understand the movement, the direction, and where to enter, where to exit. And we use demand and supply to explain. I'm sure you know that when demand is greater than supply, it means that plenty of people actually want to buy the few amount of that particular thing. And what happens to price? Price goes up. And because price goes up, we call this an area of support. Whenever you hear support, automatically it must register that this is where price is going to be going up. Support is equal to price going up, and then resistance is equal to price going down. And we're going to show you this graphically. We're going to cross over to a chart and then show you that as well for you to understand exactly what we mean and how to, take advantage, because it's all about taking advantage of what we have at the end of the day. You can see this is an uptrend because price is going up, and this is a downtrend and price is going down, right? It's an uptrend, price is going up, and this is a downtrend, price is going down. And I want to show you this some more using a live chart, because this is very key, very, very important. Now look at this, guys. Let's look at this together. Now, based on how price is moving, you can see it moves, using these candles, as you can see. I'm just going to trace it. So when you see the tracement, you would understand better, and it will help you to see those key areas for us to mark out. You can see as I'm tracing it, just like normally how you can trace things, this is what we're doing here. So as we're tracing it, I'm going to show you what we have over here. From this point here, price went down. So we can put a horizontal line to represent what? To represent resistance, because price went down from here. From this point, price went up. We can put another horizontal line here to represent support. Don't forget, support is where buyers, come in. So they take the price up. Resistance is where sellers come in and take the price down. You can see here a couple of times price kept on going up from here, from this point here. Now, the unique thing now is that when the price broke this support here, when price broke the support, normally when price breaks an area like support, it breaks that area, automatically becomes resistance. And then we're expecting price to bounce over there. If it breaks back up, that place becomes support again. So understand that an area has two sides, right? So here was supposed to be resistance. You can see price didn't quite get there. Then we had this point over here. So the way that we are being able to pick our support and resistance areas is based on the movement of price in this manner. When price moves in this manner, you see here support here resistance, here you can see. So you are picking these points, here being support, here being resistance. When price broke this point here, this resistance turns to support. Price came back from here, this becomes resistance. And you can see price came back to that area of support where you'd have bought. It pushed higher. Here, after breaking, now becomes support. And then price comes back again for you to buy. Here is resistance. And then you buy here and watch it go up. And that's how you see a full-blown downtrend in this manner. And this full-blown downtrend is now where you are able to start picking your entries. So in these places that we're picking, in the opposite for downtrend, we have one here, and then we have another one here, right? And you can see this one too. We have one here as well. So we're just picking these areas based on how price is moving in this manner. So if you look very well, this area that we picked here as a former support after it broke out should act as resistance. And this is what happened. It came back here, acted as resistance, and then it's going down, right? From here, it's now going down. Here, that acted as support, support, support. You can see this is very fresh. It broke down over here and then came back here, which should now act as resistance. And then look at what's happening. It has now reacted and is now going back down to this area of support. And the trend is what? The trend is down. And that's where we're concentrating on the resistance areas where we would like to sell. So always identify the trend. As a trader, try to identify the trend first of all, which is the price action. Once you see that it's a downtrend, ask yourself, what would you like to do? Preferably, you would like to sell and follow the downtrend. Where would you like to sell? You would like to sell at the areas of resistance. So you need to be able to identify these areas of resistance, draw as many charts as possible, practice, practice, practice. By the time you start to see the charts better, because you need to be able to answer the first question, what is the trend? It has to be clear, crystal clear to you. Once it is very clear, then those are the trades, those are the charts that you should be looking at the end of the day, right? And then before you know it, you will only get better and better at this, right? And then that is how you progress. That is how you become a better and a consistent trader at the end of the day. And you could pick as many charts as possible to practice. You always see clean charts, and then you'll be able to take advantage. It's all about taking advantage. This is Euro USD. If you decide to look at another one, let me just put this one here, USD CHF. USD CHF, look very well. You can also see price from here went down, price from here went up. So I can start from here and then we use horizontal lines just to mark these areas for our eyes. Because when you mark these areas for your eyes and you wait for price to come back, you can see support, support, support. But when price broke out over here, look at what happened. It came back to this area of what? To this area of former support, now resistance, where you'll be selling. And then look at what happened. Went all the way down. So once you understand this price movement, you will now be able to take advantage gradually. So this is where the implementation comes in. This is where you will need to practice. They say the more you practice, the better you get, right? And of course, it helps with experience. So I'm giving you the experience that I have in looking at the market. It's now for you to continue from there aggressively so that you can get better even faster at the end of the day, right? So now let's quickly move forward. Let's move forward. We want to round up everything in a good time. And of course, you have questions, feel free to ask questions, right? So now, based on what we have in front of us, we are going to be talking about risk management. Risk management is going to help us to minimize our losses and then maximize our profits. We're all going to have losses, whether we like it or not. Losses is part of the business. So as we are going to have losses, it's now for us to what? It's now for us to ensure that they're minimal. That is how we stay afloat. People normally say, how can I minimize? Because avoiding losses, trust me, you can avoid them, but you still have. If you're going to have 10 losses, you can avoid a couple of them, but you are going to have losses. Have that at the back of your head, first of all. So it's about minimizing the losses. So this will help you not to be afraid of losses. And then you maximize your profit effectively. So this is a case of you have a bigger reward than your risk, bigger profit than your loss. So there is a calculation to this, because before you place a trade, you have to be able to identify your volume, identify your lot size. What is your volume? What is your lot size? There's a calculation for this, and this is the calculation right in front of us. It is the amount that you are risking. Based on your account balance, you need to risk a reasonable amount. You have $100, you can't be risking $100 on one trade. What does that mean? That means that if it's a loss, you have lost everything. And if you lose everything, did you minimize anything? No, you lost your whole account balance. But if you are risking like $5 and you have a loss, what is that? Just $5. You still have $95. Do you understand? So I always advise traders for you to minimize your losses totally. Make sure you are using the smallest lot size, the smallest volume. So this is an example here. Let's assume your account balance is $1,000. What is the risk? The risk is what you determine, whether 1%, 2%, 10%, 100%, it's up to you. But don't forget, you need to minimize. So for you to minimize, it's going to be what? It's going to be, let's assume 1%. Because 1% of 1,000 is what? Is $10. I repeat, 1% of 1,000 is $10. So if we do this, we have $10, right? And let's assume our stop loss is 20 pips. Stop loss is gotten from your analysis. It will help you to know how many pips you are going to be risking, right? So you can see we have our amount that we're willing to risk from this formula. And you can see we have the stop loss here. So we can put them all together. So put 10 here, divided by 20, multiplied by 1/10. And this should give us what? It should give us 0.05. I repeat, 0.05. It's also very easy for traders to make a mistake. And instead of 0.05, they could say 0.5. Some could even say 5. So we always say you need to confirm. You need to confirm. You need to have confirmation that this volume that you have gotten is absolutely correct. How do you confirm this? You have what we call a lot size table. A lot size table. This lot size table, we have 3 types of lot sizes: standard, mini, and micro, where the standard has a volume of 1. Don't forget, we just talked about volume and lot sizes. So standard starts from 1, mini 0.1, and micro 0.01. Now, in this case, we have what is known as the pips value. How much is going to cost per pip? $10 per pip, $1 per pip, and 10 cents per pip, based on the different lot sizes that we have. And then what do? We go back and check. So the volume that we got was 0.05. 0.05, where does it fall under? 0.05, where does it fall under? Look very well. 0.01 is 1 micro. 0.02 is 2 micros. So 0.05 is what? 0.05 is 5 micros. So we said 1 micro cost 10 cents to 1 pip. So 5 micros will cost 50 cents to 1 pip. 5 micros will cost 50 cents to 1 pip. So at 50 cents to 1 pip, how much will it cost for the 20 pip stop loss that we just looked at? 50 cents to 1 pip, how much will it cost for 20 pips? $10. So that means that this 0.05 that we got is correct based on this lot size table. And then we can go ahead and place the trade, right? That was just a quick check back for you. Now, risk to reward ratio has to do with maximizing the profit. We just talked about minimizing the loss. Now we're looking at maximizing the profit. Now, when it comes to maximizing profit, this is it in a nutshell. You need to understand that you have your risk and then you have your reward. And this for me, is like the final piece of the puzzle that all traders need to understand. Because this is where you are going to either sink or swim, right? Assuming your risk is 100, I'll ask you this question. Assuming you buy something for 100, can you sell that thing for 10? What is your answer? Your answer is no. So this is not a good trade. This is not business. In every business, you want to make money. So assuming you buy something for 100, you sell it for 50, is it a good one? No. Why? Because you have not made, and you are actually having losses. You buy something for 100, sell it for 100, is it a good one? I will tell you no. Why? Because you did not make anything. You are in this business to make profit, not to break even. This is more or less break even. You didn't make anything, and you didn't what? You didn't lose anything. But this is not still a good trade. A good trade is one where you buy something for 100, and then of course, when you sell it for 200, you just made 100. You can call this ratio 1 to 2. That's why you hear some traders say ratio 1 to 2, 1 to 3, 1 to 5, and so on. Once you understand these kind of things, here being ratio 1 to 5, once you understand all these kind of things, it's going to help you at the end of the day. I repeat, it's going to help you at the end of the day, because for any trade that you want to take, after you have conducted your support, resistance, price action, you've checked the fundamentals, for any trade that you want to take, you are going to look at what? You're going to consider the risk to reward before you decide to pull the trigger. You're going to consider the risk to reward before you decide to pull the trigger, right? Good. So looking at the risk to reward now, looking at the risk to reward, it is now what? It is now a thing of knowing whether you're going to take that trade or not. So of course, these first three, you're not taking them. So this simply means any trade that you take where your reward, your take profit is going to be less than the risk, than the loss, than the what you're willing to part with, that is not a good trade. Do not take that trade. Hope you understand that. This is just the final piece of the puzzle, and it is a rather simple and straightforward one. Don't allow greed to come in where you say, oh, no, I can just rush this trade and get something small. No. What about when you have losses? When you have losses, those losses will easily wipe out a whole lot of profits, small profit that you have made. That's why today, traders are actually maximizing their losses and then minimizing their profit. They're actually doing the opposite. Now, with that said, we're going to round up with the final thing here, which is trading psychology. Trading psychology is very important. Now, to talk about trading psychology, you have questions, feel free to ask, because this here has to do with how we manage ourselves based on our emotions when we have losses and when we have winners as well, right? Because trust me, your emotions, I'm sure everybody understands this, that you tend to behave in a particular way when you are happy compared to when you are angry. So you need to have a balance. You need to be able to control your emotions. These emotions are simply in different states of, of how we feel. You're happy, you're angry, you're scared, you're sad. So let me ask you this first question. When would you be happy in this business? It's when you're making money, right? So you're making money, you're happy. Something happens, you want more. Greed easily steps in. You become too confident and you start to most likely drop the ball. That's what happens to traders. Overconfidence comes in, or greed comes in. They're on a winning streak. They increase the lot size, the volume that we just talked about. Instead of using 1%, they then use 10%. And then it's now a loss. So as that is the loss, what happens? They have lost a bigger amount within a short period of time. So that happy state now turns into maybe angry or sad. First of all, turns into sad. Let's say sad. You become sad. And as you become sad, you place another trade because you want to revenge, you want to make more money, or you become angry or whatever. And then you place another trade with a bigger lot size to capture the 10% that you had negative on. And what happens? You have what? You even have another loss. And then it wipes out another big chunk. So from your angry state, you're now what? You're now scared. You're scared to pull the trigger. You are sad. And then you hear some traders say that I'm afraid to place trades. You would only be afraid to place trades because of the losses. That's why we say control your emotions are very important. How can you control your emotions? That is the question. How can you control your emotions? Because when you are happy, you are making profit. Control your emotions where you continue doing that thing. You don't increase, I repeat, you do not increase your volume, your lot size, because you're on a winning streak. Continue doing that thing. It's going to help your emotions to be well balanced. The same thing when you have a loss, do not be angry, do not be sad, do not be scared. Place a trade again based on your analysis. Don't just revenge. Don't go in angrily. Place a trade normally and then do what? Accept the outcome because you're using the normal volume, normal lot size. It's when you increase it that things start to go haywire, right? So controlling your emotions, how to do this is based on what we call a trading plan, trading journal, and also trading management. And this is going to help us to get to our trading goal. I would even like to know what your trading goal is. So you could always let us know. What is your trading goal? What do you want to achieve at the end of the day? So for you to achieve this particular thing, for you to hit your goal, your target, you need a plan. So this trading plan is going to comprise of, hey, what instruments am I trading? How many instruments am I trading? What time of the day am I trading? Time of the day will be based on the session. Are you trading Sydney, Tokyo, London, or New York? The market is 24 hours, but you cannot trade 24 hours. What is your style of trading? Are you going to be trading with the trend, a trend trader, or are you going to be trading against the trend, a counter trend trader? There are things that you must put down and then follow. Once you have a plan, you must implement the plan. Don't just write down your plan without looking at it. Before you place any trade, you must look at the plan. Oh, what is your risk on every trade? Put it there and make sure, even when you have losses, you go back to your plan and make sure it is the same thing you are following. It's going to help you with your psychology. It's going to help you to control your emotions tremendously. What about keeping a journal? Keeping a journal is record of your trades. You are keeping records of your trades. So as you keep records of your trades, something powerful happens. You are keeping records of your winners and your losers. By the time you go over all your winners, maybe you are looking at 3 instruments, you're trading 3 instruments, and you go over all your winners. You will notice that particular instrument that gives you most of your winners. What does that mean? It is that one that you are supposed to concentrate more on. You are meant to concentrate on that particular what? On that particular instrument. And then it gives you most of your winners on a particular day of the week. Maybe it could be on a day today, like Thursday. What does that mean? You trade more on Thursdays than any other day. You can see that your trading is getting more defined. And this will help you with your emotions. You don't need to trade anyhow. And then you know the time of the day from your journal that you have your winners. Maybe it's in between 1 p.m. and 3 p.m. That means that you focus on the market only 2 hours in a day, not 24 hours. And that 2 hours is when you have the London, New York session. So you already know the session to trade. Management, how do you manage your trades? You have different kinds of trade management techniques. You have what we call the trailing stop. This, I call it like the police and thief, where the police is trailing the thief. The police is moving, following the thief, but not too close. This simply means when the trade moves in your favor, you are moving your stop loss to in your favor. So you are locking in profit. That is a way to manage your trades. Another way is partial close. When it goes into profit, just close part of it. It could be 50%, 25%, 30%, or whatever. Close part of it. That is what you call partial close, partial profit. What is your trading goal? We're gradually coming to the end. So the question for you now is, what is your trading goal? You want to make money. How much do you want to make in a month? Are you trying to make what you are doing based on your 9 to 5 so that eventually you can resign, retire early, and focus on this? What is your trading goal? What is your target? How do you want to achieve it? In life, we ask questions. The only way to get ahead is by asking questions. These are crucial questions that we need to ask ourselves. And trust me, as you ask yourself these questions, it's going to help you, to understand exactly what you need to do. Oh, I need to get the proper education. I need to get the right information. Then I need to implement. You get the information and you do nothing with it. It's as good as wasting your time. And time is what? Time is money. But you get the right information and then you implement it by practicing. You practice, and when you feel you get stuck, you're stuck, ask questions. And that's why we always say it's always good for you to have a mentor, have someone for accountability, one that you can always run back to and talk to. Oh, I did this. This was what I got. Please, what do you think? I made a mistake here. Can you help me to identify the mistake and what I should have done? So have your plan, keep records, manage your trades accordingly based on your trading strategy, and trust me, you should be good to go. Now, as we are rounding up now, we want to say thank you, thank you, thank you for tuning in, whether you are here live or you're watching this on a replay. Thank you for tuning in, and we want you to what? We want you to keep on implementing, not just keep on learning, keep on implementing. You must be a doer. Don't just be a reader. Don't just be a listener. You must be a doer. A doer is more powerful. As a matter of fact, they say action speaks louder than words, right? Action speaks louder than words. So it is the actions that you put in that gives you the results. It is the results that helps you to achieve that goal. Without actions, no results. No results, no goal. So you should know what to do right at this instance. I want to say thank you, guys. Today is Thursday. It's a brand new month, the 1st of August. We have from today to the end of the year, approximately 5 months to go. We have August, September, October, November, and December. Even if you have not achieved much in the first 7 months of the year 2024, you still have a good amount to be able to achieve something decent, to be able to hit, even if it is half of your goal, to achieve something decent. And then, of course, you start 2025 with a bang. So I want to say thank you guys for tuning in. It has indeed been a good one. I want you to keep on implementing and you will get better at the end of the day. Guys, do well to follow us on the social media handles. You can contact us if you have any questions as well. So follow us on social media handles on the YouTube. This is CSA Forex, CSA Forex. Hit the subscribe button, turn on the notification bell, watch the videos, give them a thumbs up. You have questions, put your questions in the comment section. So thank you guys. Enjoy the rest of the day. Trade safely. We have high impact news coming out for the rest of the week. The market is going to be volatile. Thank you guys. Enjoy the rest of your day and happy new month once again. Goodbye.